So because it's expensive, so the government can come up with incentives or find a way of subsidizing farmers that are involved in the production of yam, and also addressing issues of mechanization, addressing issues of fertilizers. Those are some of the areas the government can work towards improving the quality and the output of this commodity.
All right, thank you very much for your time,
Thank you,
Damilola
Chimeze.
Akimbami. Damilola Akimbami is the head of research at Financial Derivatives Company here in Lagos. Nigeria's economic recovery gained steam in the final quarter of 2017, with growth rising to a two-year high on the back of a solid performance in the non-oil sector. And early data for the first quarter of 2018 suggests that the economy's positive momentum was carried over into the new year. The PMI pointed to healthy growth in February. Inflation number indicates a slowdown. After a moderate 0.8% expansion in 2017, GDP growth is expected to pick up pace this year and come in at about 2.6%. Now, this week is the final week in the first quarter. Let's get a sense of the outlook for the economy as we enter the second quarter. I'm being joined by a research analyst at FXTM, Mr. Lukman Otunuga, joining us from London. Good morning, Mr. Otunuga. Thank you very much for joining us on the show.
Good morning. It's a pleasure to be here.
So tell me, what's your assessment of Nigeria's economy in the first quarter of the year?
Nigeria's economy remains resilient. As we can see, the nation managed to recover from a recession in 2017 by rebounding 0.82%. When you factor in how Nigeria's foreign exchange reserves are also swelling with foreign exchange stability, the outlook for the first quarter of 2018 looks highly encouraging.
Going into the second quarter, what should we expect to see?
Going into the second quarter of 2018, markets are asking, when will the Central Bank of Nigeria cut interest rates in an effort to stabilize or push growth? I think what we should be looking forward as we enter 2018 is oil price volatility. Although Nigeria continues to remain on an ongoing quest to diversify away from oil reliance to other sustainable sources of growth, I believe that oil price volatility still remains an external risk for Nigeria. So we should be watching to see if oil prices continue to appreciate or if the oversupply concerns push oil prices lower.
Now, the Central Bank Monetary Policy Committee will be meeting next week for the first time in the year. What are your expectations? Are we expected to see a cut on the interest rate or perhaps remain status quo?
I expect the Central Bank of Nigeria to remain status quo because although, as we said earlier, economic conditions in Nigeria continue to improve, there's one key ingredient missing, and this is inflation. My suspicion is the Central Bank of Nigeria is likely waiting for inflation to reach single digits before moving forward to cutting interest rates to stimulate economic growth further.
Now, as an investment analyst watching from outside, the fact that the Central Bank was not able to hold its monetary policy in the first quarter, does it really mean anything for the market or perhaps investors looking inwards?
I mean, while such can create uncertainty in the short term, and naturally uncertainty may weigh on the Nigerian economy, the fact that the Central Bank of Nigeria is able to go beyond this and form a quorum should continue to support the sentiment towards Nigeria.
And the outlook for the Naira as we head into the second quarter, what's your outlook?
The Naira continues to display resilience. Naturally, one would think that the fact that US interest rates would increase will impact the Naira because it's the emerging market currency. But I feel that the fact that Nigeria's foreign exchange reserves are swelling, at the same time oil prices are increasing and domestic production in oil continues to rise in Nigeria, the Naira is likely to remain supported and stabilized in the medium to longer term.
And what external risks could impact Nigeria's current economic recovery?
This is going back to what we said earlier. There's three key risks that I think may continue to impact Nigeria. Number one, oil price volatility, simply because Nigeria's chief export is oil. Two, the dollar. And number three, Donald Trump. So, if you've been looking at the news lately, concerns of a potential global trade war between the two largest economies has actually sparked some uncertainty, and naturally, uncertainty will continue to impact emerging market nations such as Nigeria.
And how do you think that global trade war could impact Nigeria?
So the indirect impact of a global trade war comes from the uncertainty. When investors are uncertain, they remove their assets from emerging market currencies, emerging market assets, and power to safe haven investments.
Now let's look at the global oil market space. What should we expect from OPEC and the U.S. shale?
So we can see oil prices have become interestingly bullish. The reason why oil prices are trading high may be simply because of geopolitical tensions, dollar weakness, and ongoing market optimism over OPEC's supply cuts eventually stabilizing the markets. Recent reports of OPEC potentially extending the production cut deal beyond 2018 have also supported oil markets. While short-term, oil prices could remain supported, I think we should always keep in mind that rising production from US shale remains a threat to higher oil.
Now, just before I let you go, Mr. Lukman, let's take a peep into the dollar, U.S. economy, and the Federal Reserve policy. How do you think all of that will impact Nigeria?
So with the dollar, we've come to understand that every time the dollar appreciates, it directly impacts Nigeria. But looking at the United States, for example, we can see that the dollar's under notable selling pressure, even though the Federal Reserve moved forward to raising US interest rates to the highest level since the 2008 financial crisis. I think that the fact that the Federal Reserve has moved forward to predicting to only raise US interest rates 3 times this year has punched the dollar, and naturally a weakening dollar would be warmly welcomed by the Nigeria economy.
All right, thank you very much for your time. Mr. Lukman Otunuga is a research analyst at FXTM. We'll take a break, and when we return, we'll look at the delayed budget and its implications. Do stay with us.